Good evening, everyone. Eds here from Unity Trading Group. Welcome to the Monday update. Before we begin this evening, hit the links down below in the signature, in the description, to find out more about what we do here at UTG, and of course to continue the conversation well beyond TradingView and this video, of course. Without further ado, BTC, where are we at? Where have we been? What have we been talking about over the past couple of updates? We'll go all through it tonight, and of course, it's good to be back. Good to be back in front of the charts. I did have a little bit of an extended break, of course. Didn't stream Thursday, Friday last week, but never fret. We are back here today. So BTC, where have we been? So last week we did discuss the likely scenario of 61 and the 50 being the relative top of this move. This move being obviously from demand all the way and moving up towards those levels of fibs. And we really described it in this way because we weren't seeing a meaningful increase in volume. It was still, very much decreasing. The price was increasing, but our volume was not. And of course, we did end up getting the increase in volume, but it was in the direction that we were, looking towards, which is down towards our level of demand there at 45K, which is the level that played out, just to the left here through that liquidity. So what does that mean now? Where are we going to go from here? So look, if you ask me, and if we look at some of the TA, if we look at, what it is telling us, more than likely this demand will fail because we have eaten away most of it. It does not really exist. We have it on the chart, just for some clarity on what area that we were looking towards. However, this demand is pretty much toast in my opinion. And we are very much, playing with this liquidity to the left here that is drawing across, of course, but we are not really gauging that as a valid, strong level of demand. The most valid level for me, still maintaining that 41K mark down below. If we are to see a bounce from here, it needs to be substantial. It needs to be backed with some volume, and it needs to, start breaking some of the market structure that we're seeing at the 61 and 50 level of fibs, because we've tested that area once before and we have failed because of the vast liquidity that we see to the left. And of course, the level of Fibonacci is just describing that liquidity. If you put a couple of levels, on the chart, and I'll just draw some in, you can see the liquidity and how those two levels at 61 and the 50 are, playing respect or respecting those levels with multiple levels of resistance, multiple levels of support as well, and that flipping, in the end, of course, to give us that move to 52. And you can see how those levels play out with those Fibonacci 50 and 61 retracement areas. But that really alludes me to, talking about the level of demand as we have. And 45K, we are at a nice round number for this area, for this level that we're at with BTC. But we haven't seen a very decent reaction. And the reaction that we've seen has, occurred inside the level of demand that we had on our chart, that we have observed. So it's not fantastic. It's not great. If we see a movement to the upside, I do think it's going to be short-lived, maybe back to the 38.2 if we do get there. But I think more selling pressure is probably the way to go, even if we see it back at the 0.0 at 43K or even lower than that at 41, which lines up very nicely with our liquidity just to the left there. And you can see some of that area, of course, playing retrospect to that level of demand, where we have some levels of resistances, some levels of support, floating about that area at 41K. So that's probably where I would see it occurring. But let's have a look at the daily, and let's give us a more broad, idea of where we're going. If I'm just moving this out of the way very quickly, you can really see what I'm really getting at. So we've had our movement to the upside. We did have a level of supply formed at 52. And of course, the meaningful pullback that we're experiencing now on the daily time frame still has a lot of room to the downside to move if we are to move, come towards that level or even move further towards that level on the steamroller on the RSI indicator. Because what we've observed here, we've observed the low of the market cycle, the high of the market cycle, and what we're expecting now is this sort of region to occur, from the movements that we're seeing. And everything lines up very nicely with our levels of demand and levels of supply. And look, it really comes down to is the movement on the daily time frame going to facilitate more downside? And I think it might. Of course, we have been talking about this for quite some time. I've especially looked on the daily time frame more than once on one occasion for our daily updates. And of course, we are seeing that come to fruition, of course, now where we've had that lower low scenario, we have had a lower high scenario. And of course, the next step in the movement is another movement down. That is the general the general pattern that I'm looking at, that I'm following, general market cycle, very 101 type stuff on daily time frame. So something like that is what we're looking towards. Of course, we can be wrong. We're never perfect. If we do move up from here, fantastic. We're well positioned for that. And of course, we'd like to see it move to the upside. But, reality takes, you take in the reality, you take in the logical aspect of it, and we're looking more towards that 41K for now. Thank you all for joining me tonight. I'm Ads from UTG. If you like what you see, do share it around. If you like what you see, you're welcome to invite anyone you like to those links down below in the description in the signature. But for now, we'll keep the conversation going. Leave us a comment down below. Like the video if you thought it was useful or meaningful, of course. And of course, we'll see you in some of those links as well. Ads from UTG. See you in the next one. Bye-bye.